Mid-cap stocks have taken a lot of beating since last 1 month or so, but then they are showing signs of bounce back. We are, having a masterclass session, and none other than Porinju Veliyath is talking on mid-caps and his way of approaching this market. Let's cut in to that conversation with Porinju.
I will tell you, we had 25 lakhs people invested in those days. Always the maximum amount of fund flow comes at the peak of markets, when everything is looking good, everybody is happy in the market investing. You go on seeing higher NAV every day. So more people come. A lot of new money also come to the market at that peak kind of a situation, the cyclic. So people who invested just before the big fall of 2008 January, if I remember, we had 25 lakhs clients invested. It went down to 16, 17 lakhs in a short period of time, few months. See, that doesn't mean they've lost money. That 16, 17 lakhs have grown back to 25 lakhs, 50 lakhs, 1 crore, 2 crores plus after that next few years' time. So this is the advantage of investing in small and mid caps. And traders, the leveraged investors, they are the people who lose money. Those who try to gamble on the equity, which is a very serious investment avenue, unlike most people believe it. Especially Keralites, I always have felt, mostly they feel decent people should not go near the equity. You keep your money in the FD or buy some land. That has been the traditional approach to investing our investable funds, the savings. Things are changing. So we had some very larger allocation of household savings to equities in the last 1 year, 1.5 years, for various reasons. Unfortunately, now in the good spirit, the time of good spirit, there has been a big fall, but that money flow may not stop. It can slow down for the time being, but I'm telling you what we have seen, the domestic savings chasing equity, what you have seen is just tip of an iceberg. We are one of the best savers in the country, in the world. Of course, it has fallen from 30 to 33% to 30% of the GDP now. Even still, it's a very quite large amount of savings our households are doing. Indian households generally are not very leveraged. So in that context, the savings have got more relevance and importance, significance. So I am very, very bullish on small cap and mid cap at this point of time after the big fall. There is nothing to regret if you have been in the market, because we had 5 years of unprecedented bull run. The way massive wealth was created by investors. In our own PMS, according to Varma and Varma are the auditors for our system. Mr. Vivek is our auditor right now. And we had 45.2% CAGR, the 5 calendar years till this December. 45.2% CAGR is, those who understand the maths, it's amazing. Of course, in the first quarter of the current financial year, it has fallen significantly. But somebody invested 5 years ago is sitting on huge profits and huge return. Maybe somebody who invested 1 year ago, say 50 lakhs, it might have gone to 65, 70 lakhs and come back to that level and below. And somebody who invested fresh first time in November, December, January, there is a hit taken. If you go by the prices, I call it a paper loss. But whereas people feel it's a real loss, okay, my 50 lakhs became 40 lakhs, I lost money. I think this is not investing. Investors who understand what is equity investing will never complain that. This is just a paper loss if you are in the right stocks and if you are a prudent investor. It happens. Anybody get carried away when the markets are on an upswing. That also for many years, we develop some kind of complacency. So it's quite natural. Now, after this deep correction, I would say, there were multiple factors which was causing this kind of a deep correction when the Nifty and Sensex were staying very strong. And this is like something I would say unprecedented. We can't compare it with 2008 or the 2010, maybe to some extent. Again, a smaller version of this thing happened. So there were many factors. One was the what do you call the euphoria earlier created. Most people were aware, including us, but we could not really act because we are long-term value investors. We couldn't really act on that. But we don't feel bad. We never try to attempt to time the market. So that euphoria, the high valuations, even mediocre companies in the small and mid caps, they started quoting at 30, 40, 50 Ps. Expectation was very high, and a lot of people, knowledgeable people who have an idea about the economy, those who believed India need a change, India need to reduce the corruption levels, India need to work more of equality for every citizen. So those who were feeling that way were appreciating perhaps many of India's reforms, the life-changing reforms, the big game changers, starting with the demon. There is no point in analyzing whether it was successful or not. The GST, most importantly, the IBC, the NCLTs, kind of things happening. I'm telling you, this is unprecedented for the country. This can really change the structure of our country, the economy. Very, very powerful kind of things happening. At least an attempt by the government. It's an attempt. We can't say how much it is successful. It's too early also. These things may take time, 10, 15 years to stabilize and to be felt. See, India, what's our basic problem? We do not have income. It's like a lower middle class family, India's position, I'm telling you. You know, what's our total tax income? The revenue of India, 15 lakh crores. I call it peanuts. And what's our expenditure? This 15 lakhs, 80% of these 15 lakhs, our total income I'm talking about, it goes to 5.7 lakhs for interest payment. Something like 3.5 lakh crores goes to salaries and pension, and some 2.7 lakh crores going to the defense. These are fixed cost. So there is hardly anything left. Then we are borrowing money, then there is a budget deficit, although we are just managing. It's like a lower middle class family. We don't have income. And there is a huge potential for the country to raise these things. So many of these measures, which can, we are moving, from evasion to compliance. This will take time. Nothing can happen easily, For various reasons, the way we managed our economy in the last many decades, things have come into a very bad shape in the economy. So it has become more and more challenging year after year. Perhaps we have lost the golden era of opportunity to grow like China. Now, we all know 30 years ago, India and China had almost same kind of an economy, the wealth. And where is China today? We are $1,800 per capita income. India and China had the same per capita income 30 years ago. And anybody can say, what is the China per capita income? Some wild guess? It's $8,500 is the per capita income. This per capita income is the key. Every person in the country, on an average, have so much wealth or so much income. That drives the economy. That can drive the richness. That's the only way we can reduce poverty. So our politicians generally, in the last many decades have mismanaged the economy is the only conclusion we can say. I'm not blaming any particular political party or leaders. Generally, the focus had been on corruption and, their own wealth creation, so in which the nation's interest has taken a setback. That's the main reason. I always say that's the reason, only reason we have 500 million Indians living in poverty. We all are worried about our returns, whether it can make 15% return or 30% return in small caps, where I have told earlier also, the mothers in most of these families, they are worried about how to feed their children this evening or tomorrow, or a visibility for the next week. That's the kind of situation we are facing. So anyway, the political worries, the second aspect which has taken this, a lot of people started suspecting that the current style of government may not continue. I'm not talking about politicians or leaders kind of thing. And another biggest worry, I think, among the knowledgeable people who understand India's economy and how politicians manage it, the biggest worry is the recent development of a potential of a Khichdi government. That's what I think some people call. That's the most dangerous for the country. I don't know what, I'm not telling any, I'm not supporting but for knowledgeable people, that's India at this stage cannot afford it without any credible names in the leadership. If, without any similarity, some 10 parties or a dozen parties get together and try to rule the country. And they very openly say it's not for the nation. It's for defeating one man. So that's the most dangerous situation our country is going through. I'm not again supporting or objecting to any political parties, but this is a political crisis. So the knowledgeable people in the market has realized, or they are looking at this potential risk. I was just listening to Rakesh Jhunjhunwala yesterday. He was talking about Narendra Modi. Yes, what was that? The word he used. I just have written it here. I forget names facing an audience. So, he's a socialist, is what he was telling the Prime Minister today. We have a small issue, which again, very knowledgeable people understand. Too much of democracy and a little of zero secularism is weakening our economic structure, the social fabrics of the country. This is very, very important. Again, I'm not going for any political discussion. What I'm trying to tell you, so there is some kind of gray area in politics where a lot of people wanted these reforms. Now it's a painful thing. All these things are painful initially to implement because they are huge game changers for the economy and the country. Very painful to go through that for every citizen. But it is required. Now see the spaces, when we come to the small and mid cap, the biggest challenge, the risk factor, is the promoter's integrity and honesty. Anybody will agree. This is the biggest risk factor. I have gone through the pain many times, but still I am pursuing that. Still I believe India is getting transformed into a system with more transparency and room for more corporate governance. I think a lot of things happening today, especially in the banking system now. With this IBC, the power is now with the lender. Earlier, the lender had no power. So here, you might have seen, a lot of promoters are struggling. They are selling off the assets. First time, the huge fire sale happening among the large companies, they are selling off their assets. First time in the country. This has never happened. Because, or they will lose their company. This fear of losing the company has never happened in the history of India. I really appreciate India for creating such kind of rules and laws and regulations, enabling this. So there is real fire happening. And I think, so there is all clarity and visibility that India, our banking system is getting cleaned up, which was the fundamental basic problem in the last few years. Our traditional, the loan given in the last 10, 15, 20 years, the way it was managed by the regulator and the government and the politicians, and that created the huge mess today. So I think government is in the right direction in creating the rules and regulations for that. So that problem is really getting solved. Most of us are underestimating all these reforms. The impact of these reforms in our economy, in our growth of our economy, the growth of our corporate earnings in the coming 5 years and 10 years. I'm telling you, this is unprecedented. You have to wait and watch for the results. So there is something is initiated. Now, one need not really fully depend on the current government, even if another government getting formed. See, India has always grown despite all these politicians. Our natural growth, depending on the demography, I think that is always going to be there. So we need not really worry about the economic fundamentals, the macro aspects of Indian economy. We are going to grow. That organic growth is going to drive the return of equity investors. Of course, it's true. I had recently tweeted about, if Narendra Modi and the policies continue to be there for next 5 years, in the long run, our economy is going to grow 2% higher than what it would be otherwise. This is my strong belief. There may be a lot of people disagreeing to that. I don't want to make it a point, but this is my strong belief with whatever knowledge I have on the economy and how politicians manage the economy. So even without that, one need not be feeling, okay, it's a time not to touch, especially the smaller companies. You buy only the TCS, HDFCs of the world. See, After this fall in the mid caps and small caps, and this high quality, large cap companies staying strong, I strongly believe this is an opportune time to look at some of these mid caps. The margin of safety is very high, and this is going to give you much higher return. I'll tell you some examples. Now, look at, say, Hindustan Liver, a stock, I think a lot of Keralites, I know a lot of Keralites comes to me, they have been holding in the last 10, 15 years, Hindustan Liver. We had many employees who are working in the Brook Bond. Some of those companies, Tata Oil Mill, they all had this stock. Some of them got it ESOPs also, decades ago. And people have created huge wealth. Today, anybody know the growth rate of Hindustan Unilever? They are growing in single digit. Am I right, Aisha? 7-8% kind of. That is the growth rate. And we are giving a high discounting already. And they haven't made any huge wealth if you see in the last 5-10 years. ITCs or even the Reliance, only this last 1 year it moved. So these large caps were stagnant for a long time, while the small caps and mid caps created massive wealth for the investors. So today, when we have a company, Hindustan Unilever at 8% growth rate, and we are already giving it 30-35 price earning multiples. If you have another company, say one of my favorite company which I have been buying, I'm just telling you for example, I'm not recommending the stock, Kaya Limited. It's a little, not fully comparable, but a small company I'm talking about. This is having some 1,200 crores, that's the price of the company, which I expect it to grow at 20-25% for next 5 years. And the estimate is that Hindustan Unilever may grow at 7-8% for the next 5-10 years. So the large companies with high valuation are going through the challenge of the growth rate. So similarly, if you take ITC perhaps I can compare ITCs again, you know, that non-smoking business has been growing very big in the last many years, huge investments made. And even that non-smoking businesses, first time getting break-even, started making cash flow. It's growing very big, but growing at 10%. With all these new things happening also, it is not expected to grow more than 10-12% for the next 5 years. So what kind of a PE we can give? The PE is directly related to the growth rate for next few years. Maybe a company called, we have been recently buying, ATFL. Some of you might have heard this name. Agrotech Foods Limited. This is a subsidiary of Conagro, that US company. It's one of the largest food company in the world. So they are active in India. You might have seen that peanut butter and some of their Act 2, the popcorn kind of thing. They started in a small way. It's a very, very conservative company, clean balance sheet. So this company is now, looks like an inflection point. This may grow at, say, 15-20%, maybe 25% for some years. So a company with 20% growth rate and available at 20 PE, or a company growing at 10% growth rate and available at 30 PE. So this is the choice. I have seen in my 28 years of career, these companies, the smaller companies, they emerge. And ultimately, all these companies were small caps. No company is born as large caps. If large caps are born, the mother will die. You know, it doesn't happen that way. HDFC was a small cap. HDFC Bank. Anybody is aware of the market cap, the value of HDFC Bank today? Yeah, over 5 lakh crores is the value of that company. It was just 500 crores, below 1,000 crores in our times. And most of that money was made by not Indians. That wealth creation from 500 crores to 5,000 crores, 80% of that money was made by the foreigners, because 80% is the foreign holding in HDFC Bank. It's not a local bank. It's not our bank. Indians were always told, you know, equity is risky. Put your money in HDFC Bank. Never buy HDFC Bank shares. So now, anyway, better late than never, the Indian households have started investing in equities. Just started. Long way to go. I'm very confident about that technical aspect of equity. And India, we are at 2.3. Yesterday only a Prime Minister was talking about the need of growing at 2-digit, which I have been talking for a long time. We need to grow because we have got a small base and we can do it. And that process, the structural change of from unorganized to organized, from black to white economy, from black to white, even in the households, not only in the economy, it transpires to the society, to the households, to the individual, all these aspects. So there will be more compliance, more taxpayers, it's already proven. And this 15 lakh crores, is, as I told, is nothing. We will have 20 lakh crores, 30 lakh crores, and 40 lakh crores of income going forward. Most of that will come through more people participating in that process of giving taxes. So I think the stage is set for a takeoff of the economy by bringing development to the forefront. Now, if a new government come also, they are not going to reverse it. It's not going to be reversed. These are not reversible. These are very core reforms, values India is going to hold on, whichever political parties come to the power. So the stage is set for a higher growth. And when there is a higher growth happening, I'm telling you, the small and mid caps, the smaller businesses are going to contribute significantly.
Well, that's very important, Vice Porinju, talking about, per capita income of country. He's also talking about politics, not supporting any parties, but talking about how it would be better for Indian economy if there is no fracture mandate and one political party comes to the play, and also talking about how smaller companies can become larger companies over a period of time. So don't shy away from smaller companies only because their market cap is less. We'll continue with this conversation with Porinju in his master class. Let's take a quick commercial break and come back and join Porinju again.
It's up.
Hello and welcome back. Without further ado, let's go back to and listen to what Porinju has to say in his masterclass.
All of you are enlightened on these things. So I strongly feel, I don't know why I talked about the population growth. Anyway, the small companies coming back, I am extremely bullish, especially some of them which have got a very relevant business model, numbers, and some of them may be not well managed. I used to talk a theme, some of the people were complaining about it, 1 year ago, 2 years ago, when chatting with Aisha and all, buying into chore companies. So this is something I have been trolled in a big way after this big fall in the market. But I am proud of what I have been telling. I never asked people to buy a company because promoter is chore. I have always added to that, provided there are symptoms of change. So, because the structure of the economy and our regulations and policies are pointing to something very important. There is no more incentive to remain a chore. There is risk. The fear of being caught for the first time in India, criminals and the corrupt people, there is more of that fear. First time. And this has to go a long way. People have to be really scared about doing crimes and corruption. Then only we will progress. So I think we have just initiated, we have started the process by proper rule making, and this has to be fine-tuned. Maybe there are many mistakes our government might have done, because this is first time we are doing, so it is all possible. So some of these companies, I understand, I have been interacting with many promoters and managements, there are symptoms of change. And in fact, you can see, we all believe most of these stocks have fallen, crashed 30-40%. But there are companies in mid-caps, some of them were earlier chore companies, they were leading them well, and they are at near all-time highs in this last week also. There are a lot of companies. So all the companies, so not to touch mid-cap and small-cap is a foolish statement. I know many people are talking it after the fall. Maybe some people, some smart guys had the guts to even, to stop taking funds in the mid-cap, small-cap funds. Our ICICI, Naren has done it, even though, but with that kind of large amount, there is a limitation they can, implement those things. Now, another major reason was the reclassification of the stocks into small caps, mid caps, and large caps by the SEBI. So mutual funds are on a selling spree. So it's an opportunity for individual stock pickers. Some of them are gems they are throwing away at whatever price. And this is not going to be there for a long time. This is a fire sale, I'm telling you, but choose your stock. There may be many companies today in mid-cap and small caps which will not exist after 5 years. That risk is also there. So you have to be choosy, you have to use your common sense and basic knowledge and prudence to pick the stocks. There are amazing companies I can see between 15 to 20 P with reasonable earnings and growth prospects, 20 and 25% growth, hundreds of companies. They were at 30 P and 35 P or 40 P. They have come down to 20, 25, 15 Ps. And some of them are big growth companies. Some of them are fraud companies, I'm telling you. The promoters, operators, they manipulate the price always. So you should have that basic knowledge. So this is a one-time opportunity again in the many years for picking your favorite small or mid caps, and wherein you may need to compromise on certain qualities of the company. Like as I told you, the management's track record may be not very good. If the track record is very good of the promoter, I'm telling you, they're already at 40, 50 P. It may not give you much money. Maybe safety could be there. See here, you go and buy the Reliance, TCS, and HDFC banks today. Generally, we feel there is nothing to fear. But at these kind of valuations, I don't think it's not exciting. It is good. Some people do that and they are very comfortable. They are enjoying it. I appreciate that. But the big money out there, the big money is still in small and mid caps, the emerging businesses, which can go 5 times and 10 times. And India, considering the structure of Indian economy and the dynamism of Indian economy, these small businesses have got a very, very important role to play. And many of them were suffering because of the unorganized sector, especially the manufacturing companies. They are coming out of that problem. Because of the GST and many other reforms, the unorganized sector, which were always evading tax and contributing to the black aspect of the economy, they will die down. So one need not cry for them. They were already doing a crime. So now many people are accusing the government, because this unorganized sector is dying. They have to die. That's the only way to grow. There will be initial pain. We have to go through that pain. Economy has to go through the pain. Every citizen has to go through the pain for the larger benefit of the nation going forward. So it's very easy to blame, implementing this, envisaging this is too tough a job. Criticize that, aise kiya, Modi aise kiya, it's very easy to say. Any fool can do that. And mostly fools are doing it today. So we have to understand the real perspective of what's going on. So I strongly believe it's a time, and maybe in the going forward, Aisha knows things much better. She interviews the best of talent in the market very often. I think many years she has been doing only that. A very highly knowledgeable kind of lady. I really appreciate that. Anything else? I think we'll talk it. I'm not a good speaker, as most of you know. So maybe in the discussion or the chat, something could come up. Thank you.
Porinju, first of all, at the onset, I would like to say that, and I'm sure all of you will agree with me, that Porinju is a man who sticks by his words. He always believed in mid and small caps, and just because they've fallen, he's not going to change his stance because the world seems to be doing that. But each time, Porinju, that we go to a doctor also, you first try and identify what's the illness. What, according to you, went so wrong while the Nifty is holding on? Why are mid and small caps selling in the first place?
Nothing has gone wrong. This is a usual correction. We have seen this many times. Unless the new investors who came to the market the last 5 years, they might have missed it. Those who are in the market for 10 years, 15 years, and 20 years have seen such many pockets. But invariably, after this fall, every time markets have bounced back, or that particular segment which has suffered has bounced back. As I told earlier, there are underpriced and overpriced stocks every day in the market at any level of index. That's a different aspect. That apart, this general kind of sentiment-driven fall, markets have come up every time. So we are not in a bear market is what I want to tell you. So the question comes, some of you feel, what is a bear market then? I'll tell you, in 1989, December 29th, I have memory of this date.
You don't look that old.
The Nikkei index, the Japanese stock index, it had gone to 39,560. I'm talking about 1989, 39,000 Nikkei. Today, after 3 decades, it is at 22,500. This is called a bear market. This might have happened in the 30s in US, or sometime point of time in 70s. You might have heard this history. So, because they all have grown up economies, saturated kind of. We are hardly anything. Just 3% of the world wealth is in India. $2.35 trillion. We are too small a base, and we talk about a bear market. Better to escape to Dubai. I think most of our Keralites do that. We can't afford to do that. We are heading for huge trouble unless we grow at a much higher rate and create a reasonable kind of resources. The 17% of the people in the world live in India, sharing 3% of the wealth. This is not sustainable. We have to find ways. We have to be disciplined. We have to go through the pain of reforms. We have to cooperate. I would say, as an independent person, not biased. I have my political bias, not because of anything else, but looking at the economy, being a good citizen. The Congress or these parties should all get together and help this process of reforms. I'm telling you, India can grow at 13-14% for a while, at least 5 years. That is what is required. Our politicians, political parties and leaders, they should get together for the nation. Not a get together to defeat Narendra Modi. So here, there's a huge difference. Only very few people understand this. India doesn't belong to Narendra Modi or anybody. So we need very credible and capable leaders supported by all political parties. I don't know, if such a situation comes, I'm telling you, this will be exciting growth ahead. We can grow to $5 trillion economy in 5 years. Forget about 7-8 years what is projected. The kind of potential, because we have inherited one of the best, the richest economies in the world, structurally and potentially. So I think we are still not late, or better late than never. The potential is there. Sorry, I went out of the question.
No, before anything else, can all of you please put your mobile phones on silent or switch them off? It's really disrespectful. Thank you very much.
Yeah, so the conclusion is, this is not a bear market, just a correction.
No, I was just wanting to know what is leading to this kind of correction. Were broader markets getting overheaty? Or is there more value on the table for large caps now? And will that remain to be the case for the next 1 year?
So yesterday, somebody in my office was telling, since Balu joined Equity Intelligence, the market is down. So somebody is here. So it coincided. So somebody can attribute, because of Balu joined Team Equity Intelligence, the markets are gone down. So we can attribute any reasons. So generally, it is looking visible, the political uncertainty and the earlier high valuation. In general, we got into a euphoria. So that is good enough for a fall and good correction. Doesn't need much more now a lot of people attribute this to the global cues, which I don't agree. Doesn't look like that. Especially the mid and small caps in general, they don't follow any global cues kind of thing, other than the pivotals in the Nifty and Sensex.
Well, that's interesting Q&A session going on with Porinju and Aisha spearheading that. Let's take a quick commercial break, and when we come back, we'll go to that Q&A session again. Hello and welcome back. There is an interesting Q&A session which is going on between Porinju and Aisha and a lot of audience in Kerala. Let's get back to that.
Overvalued, especially the mid and small caps. But we go on taking comfort in our individual stocks. These companies are worth so much, and this price today. See, value investing is very simple. If you find something is worth 100 rupees and it's available today at 30, 40 rupees, pick them. It's as simple as it is. So estimating this value, whether it is 100, I may say 100, Somebody else may feel this is worth only 85 rupees. So that is where the dynamism happens. That is the job of an analyst or a market expert. So in which there is difference of opinion. That is why the market exists. And somebody out there in Mumbai may feel this is worth only 25 rupees. So we can't, so there are many opinion price targets on the same business. So the whole dynamism is in valuing a company. The price is known. Everybody knows the price today. So I feel let us not go too much why the market went down, why the stocks had a huge drawdown or sell-off. There's panic. We know these technical reasons also, where mutual funds started selling in general the small caps and mid caps and buying into the Reliance and TCS of the world. So in mutual fund also there is a herd mentality. We have so many fund managers. So that herd mentality is on play. I feel it's a passing phase. I will be hugely surprised if the sell-off and panic in the mid and small caps is not already over.
Okay, good to hear that. Good to hear that. No, why we dwelled and I insisted on dwelling upon what went wrong is because you must understand the predicament of the market. Like we've been talking, in the last 12 years, you've not seen the Nifty hold at an all-time high, roughly around it, and the broader markets be in pain. It's a very divergent, dichotomous market that you're staring at. So it's important to understand for the common man as to what is really going on in the markets, and especially in the broader markets. So since this is a master market, and this is a master class with you, and you are the champ when it comes to picking stocks, what are the key 5 things, now that I know today that mid and small cap stocks are available cheap, what are the 5 key parameters or 10 key parameters that Porinju Veliyath looks at before identifying what mid and small cap to buy, that all of us managing our own money, perhaps, not have as much as 50 lakhs to invest in your PMS, what should we look at?
I feel the most important factor now in selecting a small mid-cap could be the business model of the company. That is the fundamental basis on which we look at a company to own. We are buying ownership in these companies. So whether this is a business which is built to last, which has got a relevance going forward, after 2 years, 3 years, and 5 years, it should be relevant. And today, this thought process has the maximum relevance. Why? Because of the disruptive world, the disruptive growth going on. Many companies and businesses which were blue chips in the last 50 years, 5 decades, all on a sudden can become irrelevant for the human consumption. So we are going through that phase. Many companies are going to die. So like never before. Companies have been dying every time. But this is something very unusual. Companies in mass numbers, hundreds of companies can go out of business. So especially in the mid and small caps, we have to be extremely careful in selecting the stock. Look at the underlying business, the products they manufacture. Are they going to be futuristic? Are they going to be disrupted? The services what they offer, will it be disrupted? There are many such examples. I think all of you are experts in these things. So many companies are going out of business. And this is more relevant because your money can go to zero. The extent of risk is so huge. It was not like that maybe 10 years and 20 years ago. Here the relevance of the business goes, suppose it could be leveraged also, the kind of companies. A leveraged company, their business is going out of favor, it can go to zero in no time. And it's happening. Some of these manipulated stocks you might have seen, what is that, Manpasand and all those kind of things, going to everyday downward circuit. Because they were overpriced. They were hyped. So the most important aspect is the business model. I would like to repeat that. So the common sense is the only way to understand this. We cannot get this academic knowledge. Through academic knowledge, one cannot understand it.
Okay.
Wisdom
So let's give an example here. Say, for instance, a Kaya, one of your recent bets, or an Agrotech Foods. Let's pick up one and let's help our viewers here understand what is it that you liked about the company, how did you go about identifying those stocks, and what gives you that kind of conviction that these are stories that you want to be invested in for a long time?
one of my well-known pick 2-3 years ago was Future Consumer Enterprises. I think that's a good example to talk about. I have been buying the stock from 6 rupees, 5 rupees, the single-digit prices, with a lot of suspicion, because companies making huge loss, and Kishore Biyani didn't have a good name those days. The management perception was very bad. So, but the stock, after a while, stock was lagging around 9-10 rupees. So that is the time I started picking in the PMS after a year. So because I had interaction with the promoters and tried to understand what they are doing. So the business model, our Nilgiris, next building is Nilgiris. That belongs to Future Consumer Enterprises. Hope you all know. Next building is Nilgiris. So the business model I found extremely exciting and futuristic. What they do, they are setting up the food parks, something India has been lacking. Always Indian farmers were on a receiving end. They always suffered. When they get a good crop, there is no price. They sell tomato at 3 rupees to the trader, and when it comes to Nilgiris, it is 30 rupees. This is what's happening in the country for last many decades. We had the Green Revolution in 1960s. Later, I think all these decades, politicians used the word farmer only for the votes. They did not do anything for the farmers, believe me. Any broad, sustainable policy decisions. So there is a huge suffering. So this company has a role to play in that vacuum. They are procuring the fruits, vegetables, and the pulses from the farmers directly. They plan to keep 3 food parks. One is already in Tumkur. In that time it was already on in Bangalore, near Bangalore. Procure these products. They clean it up and grade it. They pack it and they brand it also and sell through their own systems like Nilgiris and the Future Retail and through other retail formats. So this is a fully integrated food processing kind of a business, which I believe has a huge future. Still it is in the infancy, because government decisions, policies are not really much favoring these things, not focusing on this very important, avoiding the cutthroat middlemen. That is what is required for our farmers, even consumers. The same tomato, what the farmer gets 3 rupees, maybe he can sell at 10 rupees, and we can buy in Nilgiris for 20 rupees. So there is a huge, a savings for the consumer and the farmer. It is very unfortunate India is still going through that kind of a huge gap. For the consumer, suffer by inflation, farmer do not get any. There is a deflation for the farmer. So anyway, I found this business model has got a future. That was the time, and another trigger for me was they bought Nilgiris from the original promoters. So that excited me. So it is more, they already have 2 small formats in retail, KB price and one more thing. So all over, the company was available at around 2,000 crores market cap at 10 rupees. So this was making loss. Of course, then we analyze, how this company's business model, how can they break even, make profits and grow, have the cash flows. So it is in the right inflection point, I thought of it. At 2,000 crores market cap, it went from 10 rupees, stock price went to 75, 80, now it's back to some 50s. We have exited in between. We had a very large holding. And in fact, this is the company we made maximum profits on a portfolio management in the history. So it was something like a 6-bagger for us in 2 years' time. So we took advantage of that and bought. Maybe after selling it, we bought something that might have come down. That's a different aspect. It happens. Doesn't matter, because we are not buying it for very short term. So we have instances where we bought a stock at 50 rupees. In 6 months to 1 year, from 50 rupees, the stock has gone down to 25 rupees or 30 rupees. From there, it has gone to 1,000 rupees. So a lot of people ask, don't you keep stop loss? In value investing, what is stop loss? I don't understand. You buy something at, say, 500 crores market cap, market value. Because of the sentiment in the market or some technical factors going on wrong in the market, so it goes to 300 crores of market cap. But if we believe it has got a potential to become 2,000 crores market cap value in the next 5 years with our knowledge and our analysis, why should we keep a stop loss? Doesn't make, actually we should buy aggressively at that lower price. So this is value investing, but a share price drop can lead to more investigation about the company. Whether it's a time to think, to evaluate, am I doing something wrong? That's a time to retrospection. And we can be more aggressive in exploring it. You may go and talk to their suppliers, to their customers, to get a better picture, can meet the management again, and try to know whether they are lying to you. There are a lot of aspects. There is n number of such parameters you have to look into. There is no hard and fast rules. Value investing mostly is of wisdom and common sense. And trust me, again I'm telling you, this current fall is nothing but an opportunity for selective stock picking. And it is again, all of these kind of falls, the cycles, teach you something, teach me also something. We all try to learn. This is an ever-learning process. Once you feel, okay, now I have been making so much money in the last 5 years, 45.2% CAGR, then something waiting for you. If you feel that you are...
It's game over.
Yeah. So it's an ever-learning process. You have to be humble. You have to be humble and learning mode all the time. That's the only way to create the big money in the market. If you want to participate in India's growth in a safe manner, nothing wrong in some of you just going and picking those blue chips with an assured kind of growth ahead and will never be disrupted by something else. That's also possible. Not that we never bought into large caps. 2 years ago, I don't know, we had a chat at 890 rupees. I remember I suggested Reliance Industries.
In ITC during the budget.
Yeah, recently. So Reliance, that time I also added, the previous 10 years, it had zero growth in the stock price, in the market cap. Whereas they were making 20, 25, 18,000 kind of 18,000 crores of average profit every year. So all those profits and the cash flows of the company has been invested into the geo kind of new developments. And I was very bullish on the digital venture for the company in the long term. So that stock from 900, today it is something like 2,000 plus.
Well, that's very candid and very clear of whose thoughts are very clear. Porinju Veliyath talking to my colleague Aisha and host of audience in Kerala in his masterclass. That's all we have in masterclass. Stay tuned with Easy Now for more news and update.